Hello everyone, we would like to present about our company and make a comparison. This table compares the companies based on their industry and principal activities. In the product and service industry, Sunway Berhad and Tinwah Press Holding Berhad operate in this category. However, Sunway Berhad is highly diversified, covering construction, property, hospitality, manufacturing, financial service and investment. While Tinwah Press Holdings mainly focus on investment holding and management service. In the consumer product and service industry, Senkau Resources Berhad and Amway Holdings Berhad operate in this sector. Senkau Resources is involved in manufacturing and wood processing, whereas Amway focus on direct selling of health, beauty, and home care products. Lastly, Muhibah Berhad is the only company in the construction industry, specializing in engineering, marine, and infrastructure-related activities.
I will analyze and compare the equity position of 5 companies based on their 2023 and 2024 financial data. Firstly, authorized share capital is mostly not applicable, as it has been abolished under the Company Act 2019. They reflect current reporting practice and usual comparability across all companies in the table. Next, looking at issue and paid up share capital, Sunway Berhad record the largest company based in 2024, indicating strong financial capacity. Muhibah Engineering and Tinwah Press Holding also shows stable share capital, reflecting consistency in our ship construction. In terms of return earnings, Sunway Berhad demonstrates a significant increase from 2023 to 2024, highlighting strong probability and effective earning retention. Other companies, including Amway and Senkau Resources, show more moderate return earnings, indicating steady but constantly growth. For earnings per share, Amway record a relatively high EPS in 2024, suggesting efficient return generated for shareholders. Finally, dividend distribution show that only select company, for example, Sunway and Amway, consistently reward shareholders, while other prioritize investment. Overall, the equity comparison show that Sunway Berhad has the strongest equity position, supported by high return earnings, solid capital structure, and consistent dividend payment.
Next, I will compare different tax practices among 5 listed companies. All 5 companies apply MFRS 112, showing consistent compliance with income tax accounting standard. Sunway Berhad record the largest deferred tax balances, which remain high and relatively stable from 2023 to 2024, reflecting its large-scale and conservative recognition approach. Senkau Resources Berhad report the smallest and most stable deferred tax amount, indicating minimal impact on financial performance. Muhibah Engineering show moderate but volatile deferred tax balances due to movement in temporary differences, mainly related to property, plant and equipment. Tinwah Press Holding Berhad record relatively low and stable deferred tax amount with limited impact on profit or loss. Lastly, Amway Malaysia Holding Berhad present the most consistent deferred tax balances across both years, supported by clear disclosure and standard measurement method. In conclusion, Amway Malaysia Holding Berhad is the strongest performer in deferred tax management due to the stability, transparency and strong compliance with accounting standards.
This slide presents a comparison of lease accounting practice under MFRS 60 among 5 leased companies. Overall, all 5 companies apply MFRS 60 consistently by recognizing right-of-use assets and lease liability at the commencement of leases and subsequently measuring them through depreciation, interest expense and remeasurement where applicable. In terms of financial magnitude, Sunway Berhad records the highest lease-related balance in the statement of financial position for both 2023 and 2024, indicating significant reliance on leased assets in its operations. Senkau Resources and Tinwah Press Holdings report comparatively smaller and more stable lease balance, while Muhibah Engineering show moderate but consistent lease exposure. Amway Holdings adopts a simpler approach with limited leases disclosures, reflecting its smaller scale of these activities. In conclusion, although all companies comply with MFRS 60, Sunway Berhad demonstrates the most comprehensive and robust lease accounting practice in terms of scale, consistency and disclosure quality.
This table summarizes the financial assets of selected companies. Financial assets are recognized based on MFRS 9 and measured using amortized cost, FVOCI or FVTPL, depending on the business model. Sunway Berhad applies FVTPL and FVOCI and recorded the highest financial assets of 11.63 billion ringgit in 2024. Sunco Resources Berhad mainly applies FVOCI and amortized cost with financial assets of 223 million ringgit. Muhibah Engineering used a mix of amortized cost, FVOCI and FVTPL with impairment based on expected credit loss. Tinwah Press Holdings applies all three measurements, while MWM Holdings measure its financial assets at amortized cost only. Overall, the table shows how different measurement base affects the statement of financial position and profit or loss.
This section focuses on financial liabilities, which represent the company's financial obligation and risk exposure. Financial liabilities are accounted for in accordance with IFRS 9, whereby they are initially recognized at fair value net of transaction costs and subsequently measured at amortized cost or at fair value to profit or loss using the effective interest method. For the industrial product and service sector, Tianhua Press Holdings Berhad record an increase in financial liabilities by a reduction in finance costs, indicating improved efficiency in debt management. In contrast, Sarawak Berhad experienced an increase in both financial liabilities and finance costs, reflecting higher financial risks. In the consumer product and service sector, Sunco Resources Berhad showed an increase in financial liabilities and finance costs, indicating greater reliance on external financing. MA Holdings Berhad also recorded an increase in financial liabilities, although finance costs remain insignificant, suggesting a limited exposure to interest-bearing borrowings. For the construction sector, Muhibah Engineering Berhad recorded a slight increase in financial liabilities but a decrease in finance costs. In conclusion, MWI Malaysia Holdings Berhad has the best financial liability position due to lower finance costs and minimal reliance on borrowings. That's all from us. Thank you.